We're analyzing UiPath, stock ticker PATH, Path, to see if it's a great business on sale. This analysis is around 10 minutes. It's going to be intense, but it's going to be worth it. We're using the Select 6 analysis to look at the most telling financial metrics before estimating a fair value for UiPath. Then we're giving a final rating to the business. Before we get into these valuable metrics, let's understand UiPath's stock performance. Right now, UiPath trades for $17.79 per share. Year to date, they're beating the market. Their stock price is up 45%. Since going public just over 2 years ago, the company's stock price is down 76%. They were an investor favorite in 2021. Since then, even with their recent rebound, their stock price has cratered. UiPath is the 6th biggest position in Cathie Wood's ARK portfolio. Right now, it makes up 5.6% of ARK's portfolio, with ARK owning 6% of the business. UiPath trades $5 below their 52-week high. The company's $7 above their 52-week low. There's some short interest in the business. 7% of their shares are sold short. UiPath is a big business. They have around a $10 billion market cap. But the burning question is, why should we be paying close attention to UiPath? UiPath creates an end-to-end platform that provides automation with user emulation at its core. Its platform is built to be used by employees throughout a company and to address a wide variety of use cases. From simple tasks to long-running complex business processes, it generates revenue from the sales of license for its proprietary software, maintenance and support, and professional services. UiPath generates a majority of its revenues from the United States, followed by Romania. Now with that understanding, let's get into the numbers. Starting with metric number 1, we want their average return on capital in their last 5 years to be above 14%. UiPath hasn't been listed that long, so we'll be using their returns since becoming a public business. Their 2020 numbers are skewed due to some of their listing costs. In this time, UiPath has had negative returns on capital. They've gotten less negative in their last 12 months, but they've still been negative nonetheless. The average business earns about 7% returns. These are negative partially because of where UiPath may be in its life cycle. The company is still rapidly growing. They're spending a lot on sales and general administrative expenses and research and development, meaning the company's not generating operating income. Because of this return on capital number is negative. This is an X on metric number 1 for UiPath. Metric number 2, we're looking for growth. We want to see growth in their revenues, net incomes, and free cash flows. Because UiPath hasn't been listed that long, this analysis will be more of a snapshot. It'll be less based on their historical track records and more on what the company's done recently. Since 2020, UiPath has tripled their revenues. Their earnings are still negative, which looking at their earnings or their net incomes may unfairly penalize the business, again because it's still in high growth mode. When we look at UiPath's gross profits, they've tripled their gross profits as well. They've also maintained gross margins above 80%. Those are very high margins. It's good to see some level of stability in those margins. Importantly for UiPath, their free cash flows have gone from being negative to they are positive today. It's a big deal for companies to be able to support themselves using their free cash flows. That's ultimately how businesses are valued. So it's good UiPath was able to find a path to profitability. Because they still have negative net incomes, however, even though this may be a little unfair to the company, this is an X on metric number 2. Metric number 3, we're looking at UiPath from the view of an individual shareholder. Typically, we're looking for earnings per share growth in the last 5 years. Because their earnings may not give us the most accurate representation of the company, we're primarily looking at their shares outstanding. From 2022 until today, UiPath has diluted shareholders by 21%. They've continued diluting shareholders even as a public business. This isn't out of the ordinary for some of these high growth tech companies, but it is something you really want to pay attention to as a shareholder, as it ultimately decreases your ownership in the business. Because of this big shareholder dilution, this is an X on metric number 3. So far, not so hot for UiPath. We're still looking for our first check. Do they have what it takes to turn it around in the second half of our analysis? Metric number 4, we're looking for free cash flow per share growth in the last 5 years for UiPath. While the company had negative cash flows in their most recent fiscal year, in their last 12 months, their cash flows are positive. Because their cash flows have swung from being negative to positive, even with this shareholder dilution, UiPath has still grown their free cash flows per share. This is our first check of the day coming in on metric number 4. To recap where we stand currently, we have 1 check and 3 X's through 4 metrics. During recessions, overly levered businesses can have the biggest losses. Metric number 5, we want UiPath's net debt, which is their total debt minus their cash and their short-term investments, to be below the sum of their free cash flows in their last 5 fiscal years. Again, they haven't been listed that long, so we'll include their numbers from when they were private as well. Right now, UiPath is sitting on $1.7 billion in cash. They have a cash cushion on their balance sheet left over after paying off all their debt. They also generated positive free cash flows in their last 12 months. In these last fiscal years, UiPath has consumed $70 million of free cash flow. That pales in comparison to their cash position, meaning this is another check on metric number 5. UiPath seems to be in a healthy financial position as they're now generating free cash flow and they have this cash cushion. The big metric of them all, metric number 6, we want UiPath's average 5-year free cash flow divided by their enterprise value to give us a yield that's above 5%. If this is the case, this gives a slight risk premium to the yield of the 10-year treasury. It's the first of 2 different ways we're estimating a fair value for UiPath. Right now, UiPath has an $8.3 billion enterprise value. This accounts for both their market cap and their net debt position. It gives a perspective of the business similar to it being a private company. We learned in their last 5 years, they've consumed free cash flow. This means UiPath has negative average free cash flows, hence they have a negative average free cash flow to enterprise value yield. On a current basis, UiPath produced $94 million of free cash flow in their last 12 months. When that's divided by their $8.3 billion enterprise value, we get around a 1.2% current free cash flow to enterprise value yield. That's coming in below the risk premium we're looking for. It's also below the yield of the 10-year treasury. This means on metric number 6, this is an X for UiPath. Don't just throw the business out. We still need to estimate their fair value per share and give our final rating. Everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze UiPath, which takes us on to using a discounted cash flow model to estimate their fair value per share. A DCF model is based on the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. UiPath doesn't have that long of a track record as a public business. They've also grown very rapidly. This means this is going to be a rough ballpark estimate of the company's fair value. It won't be as well informed as other companies with higher predictability. UiPath has low predictability at best. We're starting with their current cash flows and using potentially generous assumptions to grow these into the future, assuming they grow these free cash flows at 20% annually for the next 10 years. Then in the following decade, assuming their cash flows grow at 10% annually, we'll add in their tangible book value to give an estimate of their net worth. If we want a 15% rate of return, which is what Warren Buffett looks for from his investments, from today's valuation multiples, if these are the same 20 years into the future, an estimate of UiPath's fair value per share is around $7.50. That's down less than half from their current stock price. It's down about 25% from their 52-week lows. Keep in mind that value is a range and this is a rough ballpark for UiPath's fair value. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. Now it's time to give our final rating to the business. In analyzing UiPath, stock ticker PATH, we learned this fast-growing automation business has recently become cash flow positive. They also have a sizable cash position on their balance sheet. However, UiPath still has negative operating income, meaning they have negative returns on capital, even though they have very high gross profit margins, and they've grown their gross profits at the same rate they've grown their revenues. The company has negative earnings. They've also diluted shareholders by a lot. It's worth reiterating this analysis is not financial advice. Right now, UiPath's free cash flow to enterprise value yields don't look attractive compared to the yield of the 10-year treasury. When we performed our discounted cash flow analysis, based on those assumptions, if the valuation multiples are the same 20 years into the future as they are today, and if you want a 15% rate of return, an estimate of UiPath's fair value per share is around $7.50. That's below where the business has ever traded as a public company. You need to be patient. Again, this is not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. Looking at all the factors of our analysis, UiPath looks like a weak candidate for further research. If you enjoyed today's video, be sure to like it, subscribe to the channel for more stock analysis videos, share your thoughts about UiPath, and let me know what business to look at next in the comments below. Thanks for learning about UiPath with me, and have a great day.